According to North Star and Bad Charts, gold might reach $10,000 in a bank crisis, US dollar devaluation, or inflation. What can technical analysis tell us about where we are and what is coming next? Economists have been making dismal predictions for the dollar and the stock market, and miners have been predicting significant increases for gold and other metals. Welcome to Geopolitics and Money. Real inflation-adjusted gold prices per ounce from 1915 to the present are represented in an interactive graphic. Using the most recent month as the base, the data is deflated using the headline Consumer Price Index. Every hour, the most recent value for the current month is updated. As of April 14th, 2023, the going rate for an ounce of gold is $2,024.13. Alf Field is known to be the world's best gold analyst. These are some of his projections for the future price of gold, and he is widely renowned for his numerous accurate predictions in the precious metals market. Gold's price rose during the bull market of the 1970s, rising from a low of $35 to a high of $850, a staggering 24.3 times the low price. The final peak may be projected to reach $6,221, gold's low price in the present cycle of 256 times 24.3, if the bull market that is now in place were to continue. Field stated in an article from August 2003 that he was convinced that the world, and especially the USA, was heading for a major financial crisis that would be so powerful that it would overwhelm all other factors, which referred to as the Big Kahuna Crisis. And he made a similar statement in his concluding article on the Elliott Wave and the gold price in November 2008. The currency would eventually be destroyed as a result of this. The systemic meltdown would result in a massive increase in newly created money, which would cause the price of gold to skyrocket to $10,000. This scenario is only plausible in a situation of runaway inflation, which many rational individuals believe has become a possibility as a result of the recent crisis. The likelihood of inflation is very high. Runaway inflation is inevitable given a strong enough desire and the ability to print an unlimited amount of new money via an electronic money machine. There seems to be little doubt that Ben Bernanke and his allies in other countries will have no trouble doing it too if Mugabe and Zimbabwe can manage it. The price of gold has recently been the financial sector's brightest light. As a result, in March 2023, gold's price over the dollar increased by 7.67%. The bullion price surged beyond $2,000 but fell short of the crucial psychological threshold. The current decline could end up being the last retracement before a new record high. Many experts were looking for a 50 basis point increase in response to Jerome Powell's hawkish testimony. It was taken off the table, though, after several banks failed in the second week of March. As a result, the March 2023 FOMC meeting ended with a rate increase of 25 basis points, which was positively received by the markets. The DXY index chart and the gold price chart exhibit a significant inverse association. In February 2023, the significant correction in the dollar strength index led to a significant drop in the price of gold over the dollar. Though the collapse of numerous banks restrained investors' appetite for risk, the price of the precious metal began to rise once more in March. Before moving on to the reasons for this price hike, subscribe to Geopolitics and Money and also enable the bell icon. Based on a ratio of actual gold to official money, the price of gold is $10,000 per ounce. The amount of actual gold does not increase significantly over time, but the amount of printed money does, and as a result, the dollar objective increases more with time due to the massive amount of money being produced. However, the average citizen, who would likely be caught off guard, would probably not benefit much from this revaluation of gold. The value of their regular currency would subsequently suffer grave damage overnight. Thus, their cost of living would significantly increase. There would be instant inflation, good for government debts, bad for the average working guy or woman on a fixed income. Now we are going to explore the best ways to invest in gold. What are the greatest ways to invest in gold, and which one is the best, is the million-dollar question. For a very long time, purchasing real gold in the form of coins, bullion, or jewelry was the accepted wisdom and the finest way to invest in gold. But as time went on, more sophisticated investing strategies like gold mutual funds and exchange-traded funds appeared. With gold ETFs, you can acquire a piece of gold holding without having to transport or store physical gold. Due to the fact that it absolves them of the risk of theft or robbery, it is quickly becoming the new investor favorite. Gold mutual funds include investments in firms that mine gold rather than actual gold. Investments in digital gold can be made with modest sums of cash because there is no minimum purchase requirement. Gold can be purchased and sold by weight or at a fixed value. The usual gold coin or biscuit denomination is 10 grams, and purchasing actual gold involves a sizable expenditure. Investors must instead go through a trusted third party to purchase digital gold, thus they are unable to do so directly. When investors order digital gold, agents purchase the correct amount of gold and store it in a vault on their behalf. When they want to sell their holdings of digital gold, the procedure is the same. The agent deposits the proceeds into the investor's account after selling the gold at the going rate on the market. While digital gold prices are consistent throughout the nation, physical gold prices are not. Investors don't need to worry about the purity of the yellow metal because they only own 24-karat gold, which is always of the highest quality. However, the purity of real gold may or may not be 100%. Gains from a gold investment kept for under 3 years are subject to taxation based on the investor's income tax bracket. Gains are taxed at 20% with an indexation benefit for investments with a withholding period longer than 3 years. Gains from gold investments kept for less than 3 years are taxed according to the investor's income tax bracket rates for digital gold. When an investment is redeemed, digital gold is subject to capital gains tax just like actual gold. Digital gold may be redeemed for genuine gold coins or bars, and the process is quick and simple. Additionally, investments can be readily cashed out without any difficulty. Humanity has been fascinated with gold for millennia. The brilliant precious metal has influenced and inspired countless generations, including kings, poets, and people pursuing their fortunes through adventure. This is particularly true now as the COVID-19 pandemic has brought about a sharp rise in the price of gold. More and more astute investors are making gold investments. The urgent question is when the brilliant yellow metal will cost $10,000 per ounce. Are you planning to invest in gold? Let us know in the comments section below. Subscribe to get more incredible videos. Check out other videos on this channel.